Lifeline when things go wrong. Insurance claims management, sponsored by SUMA, which is your and my, but your as municipalities insurance company. One of SUMA's goals is to share information between members on risk management rather than operating in a silo mentality, as we have in the past. With 183 cities, towns, and villages subscribing to the program as of today, this shared information is vital to preventing losses and managing municipal risk. That is why we put on events like this one today. SUMA's philosophy is not just collect insurance premiums and pay claims, but rather to attempt to prevent losses before they occur. For today's sessions, we have two people very familiar with SUMA and with managing insurance claims. Jason Mineville is the Vice President of Public Sector and Financial Institutions at Aon Reed Stenhouse in Regina. Aon is the attorney-in-fact for SUMA Insurance Reciprocal. We are a reciprocal. Jason is the account manager for most of SUMA subscribing municipalities in the southern part of Saskatchewan and has managed the Reciprocal Risk Control Program, which began in 2012. Vince Morano is the Vice President and Team Leader of Claims for Aid Reon Stenhouse, based in Edmonton. He is also the Claims Administrator for SUMA Reciprocal Program. Vince's experience working on various insurance and as an independent adjuster has given him the depth of knowledge to analyze, evaluate, and efficiently manage reciprocal claims. The third member of our panel is Nicholas Can, a partner in McKercher Law Office of Regina. His practice includes insurance defense, professional liability defense, and commercial litigation. Nicholas also has a significant amount of experience in both administrative and privacy law. Ladies and gentlemen, please join together with me in welcoming our panel.
Thanks, Glenn, and welcome everyone. For today's session, we're not going to be speaking specifically about SUMA Insurance Reciprocal. We're going to be talking in a lot of generalities because we know we've got an audience today that, it's not all SUMA members. There's some people that have their insurance policy with other companies. And we're going to concentrate mainly on property and general liability type claims. There's a number of other claims that we could go on and on about errors and omissions and crime, but we don't have enough time to be that exhaustive today. I would ask that if you could refrain from your questions till the end of the session, and we'd be happy to entertain any questions about your what-ifs or how-comes and general insurance claims and specific ones. But like I say, we're going to speak in generalities today. The first thing I want to talk about, and Glenn mentioned it about the risk control program, is preventing claims before they occur. That is our mantra at SUMA, and we encourage all municipalities, whether in the reciprocal or not, to try to prevent these losses before they occur or mitigate the impact if they're unavoidable. Now, we're not doing a risk control presentation today, so I'm just going to kind of speak about a few things, but one of them is documentation. Nicholas, in his talk about litigation and settlement, will talk about the importance of documentation. Contractual transfer is a way to transfer your liability that doesn't cost you anything. It's just simply the way you word your contracts. And training, risk control, that's when Glenn was talking about the risk control inspection. What we did with SUMA is we went through, we're up to 155 facilities that we've gone through, and we've had risk control engineers go in and inspect the properties for property losses. In other words, trying to stop the place from burning down, liability losses, trying to stop trip, falls, and in some cases some employer's liability for confined space entry, things like that. Before we go into the claims part, I just wanted to kind of give a quick Insurance 101 to help you understand how the insurance business works. There are essentially four main areas of insurance in the world. There's property, general liability, professional liability, and construction and project insurance. So think of your property insurance as your first party coverage. So protecting that's the stuff that you pay your property insurance premium for. So protecting, insuring your own property. The general liability part is what you do to somebody else. So third party claims being made against a municipality. Professional liability would be the type of professions such as lawyers, insurance brokers, doctors, lawyers, engineers, architects, anyone who gives advice and third parties are relying on that advice. That's covered under your professional liability policy. And then finally, the other main part of insurance is your construction and project insurance. So that would be your bonding, your course of construction, builder's risk policies, etc. So you're constructing a facility, it's not on your statement of values yet. The contractor typically would have that insurance until they hand over the keys to the municipality. All other types of insurance are brought about by exclusions that are contained in one of those four main policies. So exclusions such as anything to do with drugs, infrastructures, typically not covered. Furs, those types of valuable items, they're covered under separate policies made specifically for furriers. Owned automobiles, that would fall under another type of insurance, of course, unless, of course, you're talking about rented or leased automobiles, which would be covered up under your general liability policy under what's called non-owned auto. So that would be any vehicle that you're renting or leasing for a period of less than 30 days. Other typical exclusions, wear and tear, of course, fraud, criminal activity, vermin and infestation. Pollution is a typical exclusion you'll see on your property and general liability policy. They do have, and we have a number of municipalities that have them, they're called environmental impairment liability policies. So a separate policy would be in effect because of the exclusion contained in the main policy. Mold is something that is typically excluded in a property insurance policy unless it's a result of a covered peril. So if something that was covered has caused the mold, then typically coverage would extend. These next two items, war and nuclear, they're just considered uninsurable risks and no insurance company is going to take that on. And finally, loss or damage caused by or resulting from things like design defect and workmanship typically would be excluded under your insurance policy. Now in our business, we get a lot of calls where people are asking, what if this and what if that, and they give us a number of different scenarios. What if the light falls on somebody that's at the rink and it falls on them? What if somebody slips and trips and falls and whatnot? So what I try to stress, instead of just answering the very specific question, is I give them these four things, and this is typically what it takes for your liability policy to respond. First of all, you have to be legally liable. So if you have, say, a sewer backup and at a ratepayer's house, and the town would like to cover it because she's a nice old lady or a pillar of the community, that doesn't trigger your insurance policy just because of that. You actually have to be legally liable for your insurance policy to be triggered. It can't be excluded, such as an automobile claim. That, of course, will fall under the plates. Workers' Compensation Board is another form of insurance that would take the place to cover those perils off. The circumstance has to be unexpected or unintended. So you can't go in and set fire to your town hall and then come to the insurance company and say, we want you to pay for the damages. And then finally, you have to be sued for monetary damages. Now that means that when you receive a demand letter, it actually has to have a dollar figure associated with it to trigger the liability policy. So if somebody's giving you a lawsuit and it says they want you to move a fence or change a parade route or keep the noise down, that typically won't trigger your liability policy. I've got up here some warranties that we've seen in some insurance policies around the province. The first one, the Certified Water Treatment Plant Operator Warranty, is a very common one. And what it says in there, and the reason I've got it up there, is that It talks about the certification that's required for that water operator, and it says that they have to have a certain qualification in accordance with Water Regulation 2002. And the point that I was making when I first saw this clause on the number of policies is that what if you have somebody that's got a higher qualification that's what's given there? What if there's a 2006 regulation or they've exceeded the certification that's on there? If you took that policy literally, there could be a case for the insurance company to deny your claim. So what I suggest is, in response to me bringing this to some people's attention, some of them managed to get this clause inserted in there where it was talking about that the level could be equal to or higher to that level. So if you do go through, I encourage you to go back and look at your insurance policy. And if you see that certified water treatment plant operator warranty, if you can't get your broker to remove it or the insurance company to remove it completely, at the very least get that clause in there that at least softens that. There's a pest control exclusion on a number of policies, and another one that's not up there that's called the pest control officer warranty. And it's basically excluding anything that has anything related to pest control. So if you have a municipal pest control officer, then typically their actions could be excluded under your policy. The reason I have a picture of the skunk there, Pepe Le Pew, up there is because we did have a case in Alberta, which operates a reciprocal there as well, where a town officer, pest control officer, went in and shot a skunk that was causing some problems in town. He wounded the skunk, and the skunk went underneath the local grocery store and expelled its skunky stuff into the grocery store and caused $300,000 worth of damage to the food. So if you had this clause in your policy, you would not have had that claim paid. As it was, they didn't have this clause on there. Now this last one, for me, is a real troubling one. I've only seen it once, and I can't stress enough how much you need to make sure that this one isn't in your policy. Bodily injury or property damage arising out of any actual or alleged error, misstatement, or misleading statement, act or omission, or neglect or breach of duty by the insured or by any other person for whose acts the insured is legally responsible, arising out of the discharge of duties as a municipality and or a municipal council or as duly elected or appointed members or officials thereof. Now that one there, if you took that literally, could really bar any claim from being paid by an insurance company. I mean, that just seems to give an insurance company any reason to get out of a claim, whether it be bodily injury or property damage. If that is in your policy, then I would insist that your broker remove it. I'm going to pass it over to Nicholas a little bit here to talk about negligence.
Which is always fun. Can everyone hear me? There was some concerns the last time that you couldn't hear me part of the time. It was nice because no one ever says, we want to hear more from the lawyer. So negligence is, that's a lot of time, for the most part, that's what's going to trigger a phone call to one of these fine gentlemen. Basically, you are required, I use the royal you, you're required to take reasonable care to avoid foreseeable risk, right? An example is this 1856 case. We have updated it since then, but that's the one we've got here. Because it simply explains it. Birmingham, England, the waterworks installed a fire hydrant. That winter, there was a severe frost, which is not normal for there. Pipes froze, crack, flood, damage. The court looked at it and said, well, the waterworks could not possibly have expected we were going to get this highly unusual severe frost that year. They couldn't have expected that this was going to happen, therefore they're not on the hook for it. Obviously, being in Saskatchewan, we do have to anticipate that there are going to be severe frosts and have to guard against it. You know, again, just to repeat, was reasonable care taken to avoid the risk? That's what it comes down to. If you can't answer that yes, then you could be found negligent. It is highly fact sensitive. Every case is different. The care that is required in one situation is going to be different than the care in another situation. For example, if you charge people entry fees to come into the skating rink in the municipality, you owe them a very high duty of care because they're paying you for the right to come into the property. You owe less responsibility to a trespasser. right? You don't owe them the same level of care. With gross negligence, I can't define it, but I know it when I see it. And the definition that's up there is, I mean, that's what the Supreme Court says about it. We don't really know exactly what it is. It's really negligent. It's basically, you are so far under what's expected and required that it's careless or even reckless. I mean, it borders on you intended to be this awful at whatever it is you were doing. It's very difficult to prove. It comes up in the context of municipalities because if someone slips on ice or snow, which is one of the more common things in this province, they have the person who is suing the town, or the municipality rather, has to show that the municipality was grossly negligent. Not just regular negligent, grossly negligent. It's a hard thing to prove.
So on to the next slide, subrogation, one of those words or terms in the insurance policy. That's in every insurance policy. And basically, reading directly from the slide, is that it's the right for an insurance company or the insurer to pursue a third party that caused an insurance loss to the insured. This is done as a means of recovering the amount of the claim paid to the insured for the loss. So in simplest terms, if I cause damage to your property and you have to submit a claim to your insurance company to have the damages repaired, your insurance company can attempt to recover the damages that they've paid under the policy from me. And it could be for a simple item as a car accident, somebody rear-ended someone else, to more complex matters where litigation is involved.
I'm going to take a little break here to play a game called Let's Play Guess the Policy. Now, the example given here is a town employee who's mowing grass on the boulevard, and he shoots a rock through the window of a local resident's home. So show of hands here, who thinks that the town's insurance policy would respond in this case? And who thinks that the local resident's policy would respond to take care of the damage? Well, the homeowner's insurance policy would be triggered by this event. They're paying property insurance to insure their property. That's first-party damage that they've sustained. So then the homeowner's insurance company would pay the claim, but if they felt that the town was negligent, then they would go after the town and subrogate against the town and send a demand letter, and that letter would trigger the town's liability policy. So that's a third-party claim. So now you know the answer to that one. So now you've got the homeowner's mowing grass, and he shoots a rock through the window of the town office. Who thinks the town's policy would respond? Come on, people. It's the exact opposite. Go on. The town's policy would respond because we're insuring the property at that location. If we felt that the homeowner was negligent, then we would send a demand letter to that homeowner and try to recover it, which in turn would trigger their liability policy. Municipalities Act?
Yeah, the Municipalities Act, it's the piece of legislation that governs you, it protects you, it's a warm blanket in a lot of situations. Municipalities get extra protection over what you and I might get as private individuals because of the function that they're serving, budgetary constraints, that they're, to help the public good, etc. This is one of the little protective pieces in the Municipalities Act, and what it says when you cut out all of these words is if you're doing something in accordance with the Act, you can't be liable, which means responsible, for that damage unless it's a negligence action or any other tort. We'll cue the desserts. Jason thought he was really hilarious with this one. It is actually kind of funny. So the tort liability. Torts, it's just a legal word. And what it means is think of the usual lawsuit that you would hear about on TV or in movies. It's a civil lawsuit, which means it's not criminal. It's between people or companies, and it is for property damage or bodily injury. That's what a tort is. Usually, a tort involves negligence, as in someone did not, or it's alleged that they didn't take the reasonable steps they should have taken. Intent is generally not required. Criminal, for example, the Crown has to prove you meant to do this thing, you intended to do it. Negligence, that usually doesn't matter. There's some exceptions. I'm not going to bore anyone any further than I have to on those. This one is torts illustrated. I guess this one could really go either way. Was he trying to help and just pulled it out, or did he do it on purpose? I don't know. Snow on sidewalks, and we use this because it's, you know, the most common. I'm sure many of you have been involved with or are aware of claims against your municipality for someone slipping and falling, or as defense lawyers like to call it, a loss of balance incident. Doesn't sound quite as bad. So this is where you get some nice protection. Municipality is not liable for a slip and fall accident unless the municipality was grossly negligent. That does not mean, whoops, Johnny and Susie forgot to go out that morning and put down snow melt. Well beyond that. We had no plan for clearing ice and snow. We can't be bothered. They're on their own. This also sets out a notice period. If someone is injured because of a slip and fall accident, they have to notify the town within 30 days. Sorry, I keep going to town, municipality. I don't want to pick on towns. Within 30 days of it happening. Usually, otherwise, it's a year to bring an action. Bring an action is to sue you, is what that means. But they have to call up the town, send a letter, write a note, email, whatever. Hey, I got hurt on this day. They got to do it within 30 days, not 31, within 30. There are exceptions, and they're set out there. If there's a reasonable excuse for the lack of notice, I was in a coma is a pretty good one. I was on vacation does not count. Being on vacation, you have to have done it within the 30 days. Not only does there have to be a reasonable excuse, but the municipality can't be prejudiced by it. Prejudiced in the legal context means some kind of harm. Is it going to make it more difficult for someone like me to defend the municipality because it wasn't reported within the 30 days? That's always an argument. It's kind of an uphill battle. The prejudice really comes up in terms of witnesses. Larry and Susie, who were supposed to do all the clearing, they're not going to remember what they did on that particular Tuesday. Just from their memory, because, you know, once you passed, I mean, what did I watch on TV 3 nights ago? Not really sure, to tell you the truth. This is where documentation comes into play, and we're going to talk about this. You'll hear this a few times. This is the only time during the presentation I'm going to say, please do this thing, because it makes my life easier. For ice and clear snowing, written policies on what has to be cleared and how and when. A priority map is always nice. Main Street gets hit first, then we move out from there. And the third thing, and this is perhaps the most important, detailed maintenance logs. If a municipality gets sued for a slip and fall in the winter, the first question pretty much everyone is going to ask, from the gentleman here, me, and the lawyer for the person suing the municipality, is, where are your maintenance logs? Show me the document that indicates what was done on that day, by who, and when. That's what you use to establish that you have a reasonable system of maintenance. That's the thing yet, just reasonable, even though after the fact everyone expects it to be perfect. Legally, just reasonable. Just reasonable. The ideal thing that I like to see is a document created at the time, obviously, not later, is on January 12th, Susie and Johnny went out to Main Street at 7 a.m. They used the power broom, they used the bobcat, and they put down de-icer. That means that when you get sued, I can then come back to the other lawyer and say, look, here's what was done. We can show you what was done on that day. This is reasonable. It's unfortunate that someone got hurt, but it's not our fault. I will also, just as a note, I'll be asking you for those records for not just the day of, but the month before and the month after, to show we always do this. We have a system that is always in place and that's followed. Moving off the ice and snow for just a minute here, the streets and roads. This is another nice little protection that municipalities get. You're not responsible for damage that comes as a result of any walls, fences, guardrails, et cetera, or any construction or earth or rocks or trees that are near the road but not in the road. There's the bottom right there, there's a picture of a tree branch that fell on a car. A tree in the middle of the road is going to be a problem. A branch hanging over the road, strict reading of this, say, nope, you're not on the hook for that. If you wanted to.
Yeah, we did have one recently in one of our towns where a ratepayer had called into the town and asked them to trim some branches on a tree out front of her home. And the town put it on their list of things to do, but then they were, unfortunately, had a PDAP-related flood that year and got busy with other things and didn't get around to it. To make matters worse, they had a night with 85-kilometer-hour winds, according to Environment Canada, on that day. And of course, the tree blew a branch, and it, thoroughly damaged her vehicle. So when SGI took the claim and subrogated against us and sent us the demand letter, and we reviewed it, and this exact section 345, streets and roads, is what we use to defend our town. And one of the points that I made was not only were we protected by statute, but there was also the fact that she knew of the danger and then continued to park under the tree. That was one where we denied it, and then SGI came back and said, well, technically the branches were, over the road, and so it wasn't in the travel portion of the road. But I mean, it didn't make any sense if it wasn't a floating tree. It wasn't in the road. It's just a branch overhung the road. And so that was one where we were successful in defending our town.
Sewer backups, another common thing, and another where your municipalities get some protection. And I'm looking at the first line there, immunity against certain nuisance actions. Nuisance is a legal concept, and the way that I've always described it is, I call it the monster rule, and it means I'm allowed to keep monsters in my backyard, but if they escape and terrorize the countryside, I'm on the hook for whatever damage they might cause. Field burnings. That's a common one that happens all the time in this province. Yeah, I'm doing my work on my field. It spreads over and takes out the neighbor's barn, et cetera, et cetera. Even if I did my field burning exactly as I was supposed to, if that fire escapes, if that monster crosses over and takes out their barn, you're on the hook for it. It's called strict liability. Saying I took reasonable precautions to prevent the fire from spreading, it's not going to get you anywhere. So what this section is saying is, if you cannot be held responsible for a nuisance action. If water just floods for whatever reason and makes it into someone's basement and damages their priceless art collection, which everyone seems to have, you can't be held responsible for that unless, unless there's any kind of negligence that goes to it. It's a difficult one to prove against a municipality.
I'll just say too that imagine before the 2006 changes to the Municipalities Act where this nuisance provision wasn't in there, and the number of sewer backups that occur across this province probably on a daily basis. We had one of our larger centers had 114 in one night. And so you can imagine, if they were on the hook for that, and the insurer was able to subrogate against them, imagine what kind of an impact that would have had on the municipal budget for that year. We used to get a number of demand letters from other insurers for sewer backups, and we've been very successful in denying them and sending them packing, and to the point where when they see SUMA, I think they've pretty much given up on sending them to us. But we have had the odd occasion where the standard of gross negligence or whatever would have been in effect, and we've had to pay only a handful of claims.
So time limitations. There's always limitation periods, and that means it's how long you have to sue someone. With most claims, it's 2 years from the date the thing happened. For municipalities, it's 1 year. So they got to do it faster, which can be a problem for people that don't do it in time. So yeah, that's pretty much what it says. It's a year from the date the thing happened, or the what do they say? When the damages were sustained. So the day you broke your ankle or your barn exploded or whatever it was that happened.
We love it when the 1 year expires and nothing's come across our desk. So.
Well, yeah, there's sort of a flurry of emails back and forth. Okay, have they heard anything yet? No, nothing. Okay, great.
And as Nicholas mentioned, the statute for most people is 2 years in Saskatchewan. For municipalities, it's 1 year. And in the example you gave with the person in the coma, they take into account mental incapacitation. So it would be 1 year. Say that person was in a coma, it would be 1 year from the point in time where they were awake. And the other time where the statute is changes a little bit is with minors. So if you have something that happens to a 3-year-old, they have 1 year from the time they reach the age of majority. So you can imagine being an insurance company, you're trying to reserve for these types of claims, how far in advance you need to be reserving for these liabilities.
Legal precedent, it's, as the name suggests, it's, well, what did they do the last time this kind of thing happened? And usually we're going to be looking at the case law, because with some exceptions, and someone raised an example at the end of the last session, which the fact pattern was crazy. I can't even believe it actually happened, but I'll spare you from that one. But most things that have gone wrong have happened before to somebody else. And what we do is we take a look, okay, has the court ever dealt with this before? What did the courts do when they were last considering this type of thing? Is it close? Can we use that as a basis to figure out what our risk is here? And, you know, the lawyers, of course, if the other lawyer presents me with a case that he or she says, well, see what the court did here, they gave them $800 million, and I'm doing my best to try and distinguish that case. Say, well, yeah, except this stuff was different. It doesn't apply, and they'll be doing exactly the same the other way.
This next slide is a good example of how we marry the statutory defense in the Municipalities Act with the case law. This was a slip and fall on sidewalks, and you can see there we've quoted section 342 that talks about snow on sidewalks, and then cited a particular case, like Nicholas describes, where it had extremely similar circumstances, and we'll use that to defend our municipality. You can see there that the judge ruled in that case that about that it's not an unusual danger in Saskatchewan, and so that's just an example, like I say, of where we were successful in defending a town.
And just quickly on that note, unusual danger it's a legal term, and what it basically means is, was this a thing they should have expected to find where they found it? Here's a shock. In Saskatchewan, in the winter, you can expect to find ice and snow on the ground. It's just one of those things. It's an uphill battle for someone to prove at the end of the day that ice and snow is unusual, again, because it's always there. Ice and snow on the ground in Vancouver might be a different matter, of course, but here it's there. But the little asterisk beside that is the court has explicitly said there is no blanket rule that says ice and snow can never be an unusual danger, so we don't quite have that. We're working on it, but it hasn't happened yet. So litigation and settlement, I'll just quickly run through.
That's right.
Oh yeah, so we've got this slide here, and none of this stuff ever happens except for the standing up part. There's a lot of standing, but there's not much finger pointing and yelling, and you can't handle the truth. That's true. So as far as litigation, if you're fortunate enough never to have been involved in it, and I don't recommend it, it's not good for anything, personally anyway. Two usual parties. There's the plaintiff, which is the person suing. There's the defendant, which is the person defending. Someone gets hurt, something goes wrong, they put together what's called a statement of claim, and they set out, here's all the nasty things you did that caused me to be hurt. After you report it to your insurer and we do the investigation and interview everyone and gather everything, someone like me will prepare a statement of defense on behalf of the municipality. After that, we go to what's called mandatory mediation. It's required in this province. A representative of each of the parties has to go. It's off the record. It's called without prejudice, which means you can't, hey, I said that then, you can't use that against me later. The person who is usually going with me is going to be a town administrator or a council member or someone who can speak on behalf of the town to a limited extent, or sometimes someone who just knows something about whatever the incident was. If things can't be resolved at mediation, and there's a large variety of opinion in the legal world as to whether mediation is useful. I'm on the side of it is. Some of my partners disagree, but I think that's an age thing. After mandatory mediation is document exchange. You got to hand over all your relevant documents about it. Then we go to what's called questioning or examinations for discovery. someone, a representative of the municipality, gets to sit in the hot seat, and the plaintiff's lawyer gets to ask them questions and try to make them look stupid. It's on the record, it's recorded, it's used as evidence later. It's very stressful and time-consuming. If anyone's ever been through one before, they know that. After that, the pretrial conference, it's held at the courthouse. It's informal, but there's still a judge there. Everyone prepares a brief which sets out why they're so right and the other guy is so wrong. And the judge gives their, informal opinion. Okay, if this was before me in court, here's what I would say. And it lets everyone make an informed decision about, okay, do we fight this thing or do we try and resolve it? After that, trial. Something like 2% of all claims go to trial. It does not happen very often, especially not in civil litigation like a tort. Plaintiffs either give up and go away, or it's resolved through settlement, and we'll talk about that in a little bit. So litigation is very expensive. It takes up a lot of time. You should anticipate that if your municipality is sued, we're going to be friends for 2 to 3 years, unless it's settled, or they go away. That's how long things take. You got a whole lot of schedules and steps to go through. This is the part where what you and your people have done in the past is going to be criticized and questioned and attacked. This is where things like those sweep logs that you all, of course, have, right, are going to be so important. Documentation. Paper, paper, paper. Give me the paper. Give me the things that I can throw at the other side and say, look at all these things that we do. These are the great steps that we've taken to stop this. It's unfortunate that this person got hurt or this thing got damaged, but we did everything that we could reasonably do to stop it from happening. If you get notice that you're being sued, call your insurer. Don't try to deal with it on your own. It's self-serving advice. I understand that, but don't. Just don't try to deal with it yourself.
Yeah, we've had a few cases where when we do hear about it from our insured, it's usually after they've lost the case, and then they come to us and say, we lost the case, can we claim this on insurance? That's not the time you want to involve your insurance company. Usually as soon as you receive that statement of claim, that's where we would come in. Probably save you a lot of money.
Just to expand on that as well, that if there is a statement of claim and you try to deal with it yourself, you hire a lawyer, and there's possibly coverage under the policy, that policy may cover or will pay for the lawyer's fees, so it doesn't come out of your pocket. But we need to know is basically it.
Yeah. So duty of care. It's hard to do one of these things without getting into the law talk, so I'll keep it as short as I can. We all, as individuals and municipalities, corporations, whatever, we owe a duty of care to everyone around us, people that might be affected by our actions or omissions, which is often the case. Is this, as the third bullet there, is this someone who I should have contemplated could be affected by this thing I did or did not do? How much care you have to pay depends on the circumstances. Again, I think I mentioned earlier, you've got the person who paid to get into the arena versus the person that broke into the arena in the middle of the night. A different level of care is owed to both of those sets of people. Even criminals, even the trespasser, there is still a duty that is owed to them, and you hear those stories about, the person that breaks into the business and then they sued the homeowner because they broke their arm, or in the States they got shot in the face. Doesn't happen so much in Canada, of course, but you have to, everyone you owe a different level of care to. Whether the standard of care is met, it's a balance. And that's where it comes in. Can we prove that we took those reasonable steps? Someone got hurt? Yep, we get that. This thing got damaged? Yep, we get that. But can we establish that we did enough to possibly prevent that from happening? What could reasonably have been done to prevent this? Was it going to happen no matter what? After reviewing everything and talking to all of your people and looking at the documents and the case law, I'll give an opinion to the insurer as to whether I think the standard of care was met, whether I think there's a risk that the municipality could be found to have been negligent. And that informs what happens after that. Causation. Just because something goes wrong doesn't mean it caused the damage, whether that damage is the broken arm or the exploded barn. Those I'm using, the obvious examples. there are certainly situations where, yeah, more could have been done, but this thing was going to happen no matter what. An example is in the medical negligence claim. It may well be that a physician could have done more and didn't meet the standard expected of a physician, but you're dealing with a patient where this thing that went wrong was going to happen no matter what. It wouldn't have made a difference whether the physician did everything he or she possibly could have done. The bad thing was going to happen no matter what. We're looking for a break in the chain. You know, did something happen that we can point to and say, well, okay, we know this thing went wrong, but then this happened, and that's what actually caused the damages. The value of the claim, you know, its value, the worth of it, it's what's this one worth? That's the question that, you know, that's the question that would get asked. It is, as is noted there, it is not a science, it is an art. It is really a guess. We're looking at the facts, the witnesses, the documents, the plaintiffs themselves. You know, I had a situation where I got out of a mediation and I called the insurer and said, I really like the plaintiff. This is going to be terrible for us. She's just lovely. And you know, that factors in here. Other expert opinions as to the amount of damages. Very quickly, the bodily injury claims, you can get compensation for your pain and suffering. A broken wrist is worth a certain amount of money, all things being equal, about 40 grand, give or take. That's set out in case law. Case law establishes the going rate. I know that sounds a little bit cold, the going rate for injuries, but that's what it is. You know, our system can only compensate with money. We can't put it back to how it was. So it's looked at as, okay, what's this actually worth? Look at the medical evidence. You know, is there any pre-existing conditions? Are we dealing with a healthy ankle, or has this person broken this ankle before? Did it already have pins and screws in it from some previous incident? Well, you don't, used car, new car, you don't get the same amount of money for a damaged used car as you would for a damaged new car. Same thing goes with body parts. It's just a fact. Yeah. So, out of pocket, what did the person spend as a result of the accident or the incident? They had to buy Band-Aids and crutches, and they had to go to physio appointments, et cetera, et cetera. It's receipts. That's not a difficult one usually. Future losses, that's where it gets hard, and that's where it also gets expensive. We don't want anyone to get hurt. We especially don't want young people to get hurt. Young people that get hurt, you could be looking at 30, 40, 50 years, a lifetime of impairment as a result of whatever the bodily injury was. It's crystal ball gazing. It's, you know, where would this person have likely been but for the incident? And we look at things like, what do their parents do? That factors into it, because that's just one of those things. We got a 10-year-old, how were their marks? Because of course the marks we all got in elementary school, clear indicator of where we got to today, right? But that's, it's a guess. And often expert evidence is going to come into there. Had this young person or this person not been injured, they probably would have been able to make it to the NFL. Okay, still not going to be paying you for whatever they make in the NFL. Property damage, similar consideration. What's it worth? How much damage is there? Total loss, or just part of it got damaged? Replacement value, what's it cost to give them exactly that same thing again? The market value, what's one of these things worth? And eBay doesn't count. That is not the market value of something, except for comic books, I guess, or G.I. Joe figures. Actual cash value, what is the actual cash value? And we talk about that in a minute. Depreciation, again, new car, used car. A new car is worth more than a used car. You don't, similar with betterment there, you don't get more than what you had. You don't get, if your 10-year-old car gets destroyed, no one is going to pay you for what the cost of the new model of that car would be, because you didn't lose that. Did you guys have any comments on any of that?
No, we'll deal with values later.
Settlement. As I mentioned, very few claims make it to trial. I think it's 2%, maybe 3%. It just doesn't happen, regardless of what TV and movies may indicate to you. My job is, if I'm in a courtroom, something has gone wrong somewhere along the way. We like to assess the risk and the expense to avoid that. Most claims, they're either settled or the plaintiffs realize they're not going to be able to establish that something, that there was negligence, and or it's going to be too expensive for them to do it. The third bullet there, I debated putting that into the slide, but it's just a reality. You may very well have little to no say in whether a settlement takes place. It's just one of those things. Some types of insurance, there is a say. Usually there isn't. It's a decision that's made based on the analysis by the lawyer, the risk that we could be on the hook for this thing, and the cost to get there. A settlement is not an admission that you did something wrong. It is a risk versus cost analysis. At the end of the day, the more goes into it than that, but that's really what goes into it. You know, if there's a real risk that a plaintiff could get $250,000 if they take this to trial, but they're willing to take $100,000 today, I can assure you there's going to be a serious discussion between all of us as to whether or not this is worth getting rid of at this stage. We don't settle nuisance claims except for nuisance levels of money. It's not like, oh, just throw in the towel, because that's not what we're talking about here. The best interests of the insured are always the prime focus, and it may not seem like it to you, but fighting it may not be in your best interest. So settlement, it's information, it's negotiation. It's like poker. What do you have? I'm not sure what you've got, but I know what I've got here, and I think I can beat you at the end of the day with this. If we have a settlement, unless everyone is unhappy, I haven't done my job. That's really what it comes down to. When everyone is looking at me going, ugh, yes, I was a good lawyer today. Litigation, it doesn't happen in a vacuum. You know, it's public, it's out there. Anyone can go down to the courthouse and pull a copy of the statement of claim and the defense and all the stuff that's happened in there. It's time away from your jobs dealing with it, your employees' time, answering my inane emails and phone calls and asking why you don't have this ridiculous set of documents that everyone has, right? Stress, it's not a pleasant experience in the slightest. If anyone's ever, you don't have to own up to it right now. If anyone's ever gone through it, you know it's awful. It really is. Even if you're totally right, it's still awful. You know, not just risk and all that, you know, we might lose, because it happens. Judges and juries are totally unpredictable. We might have a slam dunk, and there's no such thing as a slam dunk in law, by the way. It's just doesn't exist, I don't think. I'm waiting for it. I'll let you know if I find one. You don't know what they're going to do. If you have the right plaintiff and the right circumstance, I mentioned to you that plaintiff who, wow, this person, I really like them as a person. That's the kind of situation where a judge or a jury is going to do what they can to give them money. Even if, strictly looking at the law, we did everything we could. That factors into it. Settlement documentation, it expressly states that this is not an admission of liability, and the terms of it have to be kept confidential. Yeah, it is true that a settlement occurred. They can talk about that. They can't talk about the amount. And I certainly know that it's a concern for any of my clients, municipalities included. Well, if we settle, aren't we just telling them that we were wrong? No, we weren't. It's the risks and the cost outweigh the benefits of going ahead and trying to dispute it. Yeah, so there's 2 to 3 years of litigation in about 10 minutes.
So we talked about litigation, settlement, the Municipality Act and such, but now we're going to talk about what happens when a loss actually occurs, and what do you need to do and what happens next. So first of all, you've suffered a loss to your building or what have you, you need to mitigate the damage. You need to protect the property from any further damage. If your sewer backed up into the town office, you need to clean up the water. If you had a break and enter into the premises and the door is broken or the windows are smashed, you need to board that up or you need to replace that to protect others from getting into the premises or protect it from the elements. You need to complete your incident report. And in your incident report, you need to have a list of witnesses, if there are witnesses available, that did see what happened. From that incident report, one note, the incident report that I receive from the municipalities generally done very, very well in terms of detail. Once the incident report is completed You forward that to your broker, to your account manager, whatever the case may be, and then that document is forwarded to the claims administrator, who would be me.
Just at one point on that, you should assume that your incident report is what's called a producible document. It means you have to hand it over to the other side. So it's not something that will usually stay confidential because it's a document generated as a result of whatever the incident is. If it's a specific insurer-provided document, no, that isn't. But if you have I'm sure that most of the municipalities have some kind of, okay, if something goes wrong, we fill out an incident report. Assume everyone gets to see that sometime down the road. So, among others, avoid editorializing in them. We don't see that often, but don't editorialize. Just the facts, ma'am, just the facts. Keep it to that.
Just keep it very general. Tell us what happened, because once I receive that initial report, I'm going to call you, and I'm going to ask you more questions. And during that process, we're also going to review the policy. We're going to review deductibles, we're going to review coverages, we're going to review statement of values, what may or may not be covered depending on the loss. Again, also ask for any documentation that you may have, maintenance logs, photographs, what have you, that would support the claim or would support our innocence, basically, again, depending on the loss. Once it gets to Nicholas's stage, then obviously there's more documentation, more questions that we have to ask. Other duties that claims administrator would have is to set reserves. Reserves basically is a pool of money, or the insurance company sets aside some money to pay for your loss, and it's done with every claim that is reported to the insurance company. We also assign the adjuster. Obviously, the adjuster's duties is to investigate, negotiate, and settle the claim, and that's based on instructions that come from myself or from a lawyer like Nicholas, again, depending on the circumstances. So you're going to get a call from me outlining the coverages, etc. You're going to get another call from an insurance adjuster that's going to meet you to inspect the damage to the premises or what have you. We also manage the reciprocal. We issue payments under the reciprocal, and basically give guidance to the insurance adjuster.
Well, this next slide is from a risk control bulletin that we put out to our members a few years ago, and yeah, of course, now is not the time to wonder if you value your facility correctly. So we just wanted to touch on the various bases of settlements. First of all, arriving at the value, you're going to have to consider what's building and what's contents. The building obviously is the fixed structure, and then the equipment, stock, tenants, improvements, etc., is considered the contents when you're completing your statement of values. The best way that I tell the administrators that I deal with is just picture a giant coming in and picking up your building, turning it upside down and giving it a good shake. What falls out is contents, everything else would be considered part of the building.
Has that happened before?
The giant?
Yeah.
No.
No.
We do have coverage for
Okay,
it.
we do? Oh,
We have
okay,
giant.
good.
We have
Oh,
giant
giant coverage?
Yeah.
Okay, good.
We have a giant rider. Replacement cost. This is the cost of repairing, replacing, constructing, or reconstructing the same property on the same or another site. That's without a deduction for depreciation. Actual cash value is replacing it with a similar property of like kind and quality, and they'll consider the age, condition, and will factor in depreciation. For those that get third-party appraisals done, when you're trying to see which column you're going to use for your to put on your statement of values, the appraiser will call replacement cost CRN, which is cost replacement new, and then CRN LD, cost replacement new, less depreciation. So when I receive that document and you provide the numbers, that's basically, I see CRN, that's replacement cost, CRN LD, that's actual cash value. And so that's how we determine how it goes into your statement of values. One method that SUMA has, and I'm not sure of any other insurers that offer it here, but for our municipalities, they have the opportunity for functional replacement costs. Now, functional replacement cost isn't replacing the facility with what you had, but rather with what you would want in the event of a total loss. So where this comes into play would be, like in the example given in the picture with the gargoyles in the historic building. It's not going to make financial sense to insure that to replacement costs because it's going to cost you an arm and a leg to replace that. So what you can do is replace it with something that performs the same function. And so, you're going to have, a modern constructed village office rather than trying to recreate something from the 1850s or something. Where it also comes into play is for size. If the demographic of the town has shrunk and your population's gone from 600 to 200 people, you can actually insure for a smaller facility, not with what you would have. And the opposite of that is true. If you've gone from 200 to 600 people and you have a rink that's made for a town of 200, you can actually insure to the higher value and insure to what you would want in the event of a loss. Guaranteed replacement cost is available on some municipal policies. It's not offered anymore on water or wastewater treatment plants, and it is subject to a same site clause. Now, the one thing about guaranteed replacement costs is you're relying on the insurer's appraiser to go in, typically not a third-party appraiser, but the insurer's own appraiser going in. So the danger with the guaranteed replacement cost is if they're setting the value at, say, $6 million and it burns to the ground and it costs them $4 million to replace it, well, you've probably been wasting your insurance premium for those years. So just to be cautioned at, what value that, what's that set at.
So co-insurance, another one of those insurance terms in your policy. Basically, on the declaration form of your policy, the deck page basically is a page that outlines the coverages and the deductibles that you have under your policy. And in some policies, the verbiage of there is a clause within this policy that may limit the amount payable. It could be in bold letters or it could be in red. That they're probably referring to a co-insurance clause. And what that means is that you must insure your property to value. If you do not insure it to value, you become what's called a co-insurer, or you share in the loss. Okay? So if it's not insured to value that the insurance company has outlined, whether it be 90% or 80%, whatever the case may be, and you have a loss, you may be required to pay part of the loss. So the next slide outlines some examples here, and basically it is a easy mathematical formula, which is the amount of insurance that you did have over the amount of insurance you should have had, multiply that by the loss. So in the first example here, the insurance carried is 600 grand. The claim submitted is 300,000. So in following the formula, we did have $600,000 worth of insurance. The amount of insurance we should have had, the building was valued at $1 million. The co-insurance percentage in this particular case is 90%. So the minimum we should have had is 900 grand. And the loss was $300,000. So again, following the formula, did over should, multiply the loss, the insurance company will pay $200,000 because you are underinsured to about a third. So the verbiage there, in this example, the insurance company would pay $200,000 and the policyholder would pay the remaining $100,000 subject to that deductible. Okay? The next example, where the insurance carried is $900,000, the claim submitted is for $300,000 again. And applying the mathematical formula, did over should times the loss, the amount of insurance you did have, over the amount of insurance you should have had. In this case, it's 90%. Should have had $900,000. The loss is 300 grand. Following the example there, you were insured to value, so therefore you receive 100% of the loss, subject to whatever deductibles in the policy. Clear as mud? Yeah? Good. The last example, where the insurance carried is $900,000. A claim is submitted for $1 million. The limit under the policy is $900,000, so you receive the entire amount of the limit under the policy. The co-insurance clause does not apply.
And it should be noted too, we're giving these examples because we're trying to bear in mind that there's not just SUMA subscribers in the room today. The SUMA policy doesn't have a co-insurance penalty on it, and so for those with SUMA this wouldn't apply. And the other thing that I neglected to mention when we were talking about replacement costs and appraisers a few slides back is that on our policy for the SUMA subscribers, we have a margin clause on the policy. So in an example of a $100,000 loss, we have a 125% margin clause, so the policy could pay out up to $125,000 in that case. If you have a third-party appraisal done and you insure to the value that that appraiser gives you, that margin clause grows to 140%. So in a $100,000 example, you would have access up to $140,000 in that case. So it's just something that puts some value into getting those third-party appraisals done. We know they're expensive, but there are some benefits. Unfortunately, the only time you benefit from them is that, probably at one of the worst times for the community.
Salvage, another insurance term. So essentially, if you have a loss to a piece of equipment, the insurance company pays to have it replaced or what have you. That piece of equipment now belongs to the insurance company. The insurance company can decide what they want to do with that. They can sell it, retrieve the money, put it towards the payment of the claim. Some insurance companies give you the option to purchase the salvage, and they would just deduct that off of the settlement, or you would just give them the funds.
Now we're just going to touch on PDAP claims. Now I have up here the process for filing a claim through PDAP, and we do deal with a number of these types of claims every year. We had 1 week we had 9 alone with our members, and I won't bother going through the process, but I'll just explain it kind of from the point of view from your insurance company's role in this event. This is one of the few times that you typically want your insurance company to deny you coverage, because that does give you access to PDAP. So I've had some administrators call me and says, I can't believe I'm actually asking you to deny my claim. But we get a lot of those calls, and the reason is that we do have flood coverage under the policy, but flooding is subject to massive deductibles, typically $25,000, $50,000, or $100,000, depending on your municipality size. And the reason they do that is because if there's going to be a flood, it's not going to affect one town, it's going to affect multiple towns, and in those towns it's going to affect multiple facilities, and so they apply a higher deductible for flooding specifically. For us, with those large deductibles, it's difficult for us to just deny coverage, because we do have flood coverage, and so the way we word it is that coverage is denied based on the fact that it's falling below the deductible. So a $50,000 deductible, we have a lot of claims that are in the $20,000, $25,000 area. So they don't qualify for PDAP necessarily, and they don't qualify for insurance because of the deductible. And so where we've been successful with our subscribers is to deny it based on that. The other benefit, based on the fact that it doesn't reach the deductible, but it's all in how you word it. You really do have to say in that letter that coverage is denied for any PDAP funds to be released. And then there are some things that PDAP covers that wouldn't be typically included under your property insurance policy. You're not going to insure the gravel for roads and your culverts. These are items that aren't on your statement of values. You're not paying property insurance premium to the insurance company, and so you're not eligible to collect any insurance proceeds for those items. The other things like bottled water and notification and things like that, that's what you can access through PDAP that you can't access through your regular insurance policy. So that concludes our presentation today. And if you have any questions, I invite you to please go up to the microphone. We had a lot of questions last time.
We answered everything, I guess, this time.
Mike Kronberger, Councillor, Town of Kyle. I just got a question on that, the lawnmower.
Yep.
With the window there. What if the business deductible is, say, $1,200, and to replace the window is $900? Then what happens with that? And the town employee is cutting the grass and flung a rock in the window.
Yeah, it's unfortunately cold-hearted.
So the town would get off
Dems to
scot-free?
breaks.
Is that right?
Dems to breaks, yeah. You see, you haven't triggered the policy. We're not legally liable for it in the first place. So you're not responsible for the type of insurance they pay. So they've chosen based on what they can afford for insurance, and they've decided on the deductible. So we do have a lot of towns that say, well, should we pay it? But we contend that's kind of a slippery slope for towns to go down that road and pay deductibles in those cases.
All right. So then if the deductible was enough for the store owner, then their insurance carrier would go after the town then?
Well,
Or keep
it
the
sounds
money,
like
or-
if it's below the deductible, their policy wouldn't be triggered, but there's nothing to stop the business owner himself from sending you a demand letter. A demand letter doesn't have to come from an insurance company, it can come from the individual or the business. So he could, send that letter and say, you know what, it was $700 to fix the window, my deductible is $1,200. He'll send a demand letter, a written demand for relief from the town, and that would trigger your liability policy, and then so we would take that and defend it. But, in that scenario, if the town's not legally liable, we'd more than likely deny the claim.
Right.
Larry Zumlike, Manitou Beach. We actually took the high road and just paid the premium because there are two things. Not only is there the deductible, but the person's insurance also goes up, so they get hit twice. The question I have is more related to volunteers. Every now and then you have a gala event and you put up a beer tent or get somebody on a tractor pulling a wagon with a bunch of kids, and they're volunteers. Now, we have people that their insurance is covered through being on the rec board or some other event or some other activity sanctioned by council. What about the volunteers? You have, say, somebody that drives a tractor, he's got 1,000 hours of driving on the farm, and some youngster falls off the wagon and whatever, becomes paraplegic.
Yeah, I might defer to Vince. My understanding of our policy, at least, that it does extend to the volunteers. Now, the example you gave is you said a couple of critical things. One of them was that it was municipally sanctioned, and so when it comes to something like a rec board, you have to be able to connect the dots from the village to that group. So by town sanctioned or municipally sanctioned, what we see that what we require is that it's set up via bylaw. So if you have a bylaw and you can connect the dots from Manitou Beach to that committee, to those volunteers, then coverage should extend, yes. And it wouldn't, again, like the boy falling off the wagon, I think, he would have to sue the village. It's not like something where it would be like an accidental death and dismemberment policy, like you'd get at a, for schoolyard fall. There would have to be a claim to trigger the policy.
But the village is covered. That's the issue.
Yeah.
If they get sued, then there's a $5 million liability policy.
Yeah, see, the village is definitely insured under the policy. So, but your responsibility is to make sure that board, that committee, those volunteers, that continues on, that you have that proper chain going down, all the way down to that person driving the wagon. There are cases where, and what we always ask for in those cases is that you have some form of reporting or municipal oversight on that board or committee, that you're not just insuring everyone in town. Typically we like to see some type of accounting, them reporting to council at least once a year. We have some sample bylaws for setting these types of committees up, and that's what's important for us.
Thank you. First of all, Dennis Moore from City of Estevan, and this has been a very informative session, and I thank you fellows for putting it on.
Well, thanks.
But is there a sliding scale for the deductible versus the premium? In other words, if the deductible is $5,000 versus $10,000 or $20,000, is there a sliding scale that indicates that to us, or how do we arrive at a deductible that would be reasonable? Like in my case, for my house, I have a $1,000 deductible, but it started out at a $250. Is there such a thing with you folks on a sliding scale? And that
Yeah, we have deductibles anywhere from $1,000 to $10,000, depending on the size of the municipality and what they can absorb. We view insurance as something you purchase for the catastrophe. So if you're going to have a certain level of expected losses, then you should probably be self-insuring those and not going to the well to insurance and affecting your loss history on those types of claims. So if they're expected and they're small value, then typically like a city like of Estevan size should be paying a lot of those claims directly and not always going to insurance.
And is there a brochure describing that in your package?
Not specifically with about the deductible, no. But
didn't-
we'd be happy to correspond with you on that.
Okay. That's what I wondered. I've never seen the product. Usually we have to suggest it rather than you suggest it. It's the ball's in our court really to say that, you know, for this kind of money, we'll look after it ourselves to a degree.
Yeah.
And sometimes most times it's beneficial, depends what building you're talking about, so. Thank you very much.
Yeah, and just kind of to your point, similar to how the reciprocal operates, it's what you can afford to, how much skin you can afford to have in the game too. And typically we like to see our insureds share in some of the cost of risk. If you're going to have every claim, you know, $500, it's just going to go off to insurance. There's not a lot of onus on you to practice good risk management if it's just going to go to the insurance company all the time. So, and you look at it from a higher level for the reciprocal. When we first started in 2009, we had a $250,000 deductible for property and a $250,000 deductible for liability, or retentions as we call it. And now the group has $1 million retention for property and $250,000 for liability. And so we continue to grow. And the reason that is that we want to be paying the losses that are expected. We want the insurance company to pay the unexpected losses, not the ones that are expected.
Maybe just to expand on your question there just a bit, by the time the claim gets to my desk, the deductible's already been determined in your declaration page. So if it's a sewer backup or what have you, the deductible is already noted, whether it be $1,000, $2,000, or $5,000 in the case of a liability claim.
So what I gather from most of this today is documentation is your number one big concern.
Absolutely. Absolutely.
It's our number one, not concern, it's our number one source of defense after a claim has happened. But, you know, preventing the losses before they occur is probably more important than that. But yeah, for us to successfully defend it, we need that documentation. And the point, we do have a duty to defend. And so because you don't have that documentation done, you could have done everything wrong. That doesn't mean the insurance company can go, aha, we're not covering you. We still have a duty to defend the town regardless.
Doug Barker, Mayor of Kyle. If we're going to be married for 2 years with a lawyer and the municipal wins the battle, who pays the lawyer fees?
I don't care. No.
We said in the last session, there was a saying I saw, and it said, a lawsuit is a tree planted in a lawyer's garden.
That would be SUMA assured. Yeah. If it's a claim covered under the policy of insurance and we engage Nicholas to defend the municipality or what have you, then his fees come out of the reciprocal or out of the insurance policy.
So does SUMA share go after the one that made the claim because they lost?
In an action, you're entitled, if you're successful, you can claim for costs, but it's based on a tariff, and it's points on the actual dollar spent. Yeah.
Okay.
Yeah.
Especially if you've bankrupted the person.
Well, okay, if that happens,
Because
yeah.
that's how we look at it, and sometimes in other types of policies. And typically, all the assets have been transferred either to a spouse's name or they just simply don't exist as a result of the trial. So there's no point in going after the person. There's nothing to get. Yeah.
Linda Brown, I'm the mayor of Council, and this actually isn't an urban question. It's more a rural municipal
Well, give it a
question.
shot.
Sure. We had someone out mowing ditches, and they knocked a window out of a tractor, and they asked the RM to pay, and the RM did. But what you're saying is they should have actually gone through their insurance, the people that got their window knocked out of their tractor. Is that right?
More than likely, yes.
Yep.
Yeah, I mean, that could happen in a village too, or a town or whatever, so.
Yeah.
We always say that if an example of a sewer backup into a ratepayer's home, we always say ask the ratepayer to go through their own homeowner's insurance first.
Okay.
And the reason for that is that most homeowners' policies have a replacement cost clause for the building and the contents. So they get the benefit of the damaged property being replaced with like, kind, and quality.
Okay.
Okay?
Okay. Thank you.
You're welcome.
And then, and further about the replacement costs, you might want to talk about, you know, when they subrogate and what they would get in return about actual cash value. Yeah.
When we talked about subrogation earlier, right? When a ratepayer's insurance company becomes involved and they feel that we're negligent or we caused the loss, they would try to subrogate or recover from the municipality and their insurance company. And they would forward documentation outlining their claim, okay, what has been paid in terms of the repairs to the property and the contents and the cleanup. If we are negligent and we are required to pay, the policy would only respond to what's called the actual cash value of those damages, meaning the replacement cost less any applicable depreciation. Okay, so in other words, the SUMA insured policy will not pay for a fellow's brand new desk. It'll pay for the desk that is 20 years old or 10 years old, whatever he had in his basement.
Yeah, so the homeowner would get replacement costs. The insurance company recovering would only get actual cash value. That's all they could recover.
Hi, Carol White, Administrator, Town of Assiniboia. A couple of things. Is the PowerPoint going to be available on the SUMA website?
Yes, that's my understanding. It's going to be the PowerPoint with the voices on there as well. Yeah.
Okay,
And I think
and-
it's a few days away or tomorrow. I don't know.
Perfect. I want to share it with my staff. The other thing, when we're coming up with contracts, when we're hiring people, when we're asking them to provide insurance, what limits would you recommend, like for a commercial general liability, and then on the other end, the professional liability?
Yeah, it's difficult. I mean, if I say $1 million and you have a $2 million claim, then I'm off by $1 million. So it's difficult for us. A lot of it has to do with kind of what the standard is in their industry, what they're doing for the town. I don't know, you guys have anything to add on that?
I guess it depends on the circumstances and what exactly is required. Maybe $1 million is not enough. Maybe more is required. Again, all depends on the situation.
Yeah, I mean, if they're treating your water versus, somebody coming in and painting faces at a parade, it's, two different things. So it would have to be looked at, yeah. And the important thing, too, is when you're looking at those types of contracts is are they a contractor, are they an employee? So we have a lot of cases where we have towns are employing Larry and Sue to clear the sidewalks, and Larry and Sue have only one client, it's the town, and they're going out and doing that. And so if it walks like a duck and quacks like a duck, it's a duck. They're an employee. They're not a contractor. And so that brings in all kinds of non-insurance related issues like workers' compensation and Canada Revenue Agency. CRA actually has a great checklist you go through, and it's employer-contractor checklist. Yeah, it's great.
This is more of a question on process. In another organization that I was in, we were told by our insurer in one of their presentations that should you get is it a statement of claim when you're being sued? Or when you have an incident report, at what you've done, the witness gathering, then basically you should shut up and not talk to anybody about the situation because you may prejudice your case if it ever comes to court. The old statement, well, old Bob shouldn't have been driving that truck because he's blind as a bat, will prejudice your case. Yep. They said, like we used to send out reports, safety reports, say we had this many accidents and this is the cause, try and be safer. They said don't do that because you're basically admitting culpability. Do you recommend, like when your adjusters come out, you appoint them, I'm assuming, when your adjusters come out, do they basically take over the entire case and we just, the facts?
From the initial stages, yes. I mean, but they need to work with you to gather the evidence, to gather the details. It does not make any sense to talk about the claim with anybody else, or especially with the claimant, outlining the investigation and such.
Okay. So you don't go down to Coffee Row and say,
yeah,
old Bob shouldn't have been driving that truck?
Exactly, and you know what, it does happen. It does happen a lot, and sometimes it's unavoidable, but we really have to be careful that we do not talk about or divulge any information that could prejudice the insurance company or the case.
Okay.
Yeah, and that's not just with a statement of claim, but with even an incident. If you have somebody that's backfilling and they break something, they're running the backhoe, and they should never go tell the homeowner, oh, the town's going to pay, don't worry. Like just things like that. Then we'd never admit the liability. Yeah.
I have one kind of off the wall question, and it may not be appropriate, but I've heard there's an incident or there's a situation where one of the RMs or one of the jurisdictions in the province is setting up a bylaw whereby you can run side-by-side ATVs on the street, and they're using SUMA assurance to cover the liability. I kind of thought that was illegal through SGI.
I don't think so.
Nothing?
No, it wasn't.
Then I have no idea who they're getting for liability insurance, because that was why we were going to try and set up a situation where you could run those kind of things in town, and that was the whole...
Well, we don't do, this isn't the RM program, it's just urban, so if it was an RM, it wouldn't be us.
I think it's a village, but
Okay.
a resort village.
I know, Kevin, you've had a few towns that have come up with some kind of ATV and ATV bylaws, but I don't think they were talking about any
But
kind of
SUMA
side-by-side
assurance would never-
racing and whatnot.
You would never accept that as a liability policy, would you?
Well, unfortunately, sometimes we don't have a choice with what we accept. We're on the hook regardless. Maybe they didn't tell us, but we've had a few things, some mud fling situations and whatnot, and what we do is, a lot of those things would be, sometimes they're plated vehicles, so it's not ours anyway, and it would fall under the SGI policy, but then the SGI policy has a racing exclusion. So these people are essentially running around like lunatics without any insurance. We take more of a risk management point of view when we have, like we had one where, you know, we can't really say, you know, you can't do this. We don't dictate to our towns, but we looked at their plan, and they had it so that these dune buggies were racing towards the crowd. And so we said, well, maybe what you could do is just turn the track around and have people race away from the crowd would be better, things like that. So we try to give a lot of risk management advice for things like parades, horses, things like that. We have a lot to offer in that regard.
Okay, thank you.
Thanks.
Thank you very much. That's been a very good session. I hope we answered all your questions. I'd like to thank Jason and Vince and Nick for coming.